Hey everyone, we had some tough news coming out this morning regarding Tesla stock and Rivian stock. So in this video, I'm going to go through each of the news items that came out for the companies and what it could mean for Tesla stock investors and Rivian stock investors. So
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's start with Tesla because the news on Tesla is a little bit more brief. So let's jump right into this one first. And the news about Tesla was that the Tesla cuts its price on the Model 3 and Model Y cars in the US again. They cut the prices by about 2.7% to 4.2%, but Tesla's been cutting prices aggressively this year to counter the effect of a slowing EV market. Now, what I often talk about with price cuts is that a company doesn't cut prices without consequences. What do I mean by that? Well, if you're a competitor and you notice your rival cuts prices, you're not going to sit back and just let that happen. You're not going to sit back and let them cut prices to try and take market share. You're going to retaliate. And that's what's been happening. As Tesla started cutting prices, rivals have also started cutting prices, and so overall prices have been coming down for the industry. Now that's good for customers, but that hasn't been good for investors. Now, just a few days ago, I went over Tesla's production numbers, and I'll bring them up here again on screen. In the third quarter, they reported they produced 430,488 vehicles, which in my opinion was a good number. It put them at 1.35 million for the year, and it put them only 449,000 vehicles away from hitting their target for 2023 of 1.8 million. And in that video, I said that Tesla has been cutting prices all year, but I thought that Tesla would not need to cut prices anymore to hit this 2023 target. And my reasoning was that oil prices are significantly higher now than they were earlier in the year. One of the main reasons people choose to switch to electric vehicles from traditional vehicles is the price of gas. So the price of gas makes EVs more attractive. They're inversely related. As the price of gasoline goes up, demand for EVs goes up. And so I thought that force would be strong in increasing demand for Tesla cars. However, countering that force has been rising interest rates. Interest rates are also significantly higher than they were to start the year, and that's also a big contributor to when people decide to buy cars, not just electric vehicles, but cars overall. Because typically, when people buy a car, they're financing that purchase, and the interest rate matters. So it looks like the higher interest rate is having a stronger impact on consumer demand than the higher gas prices. And so it looks like Tesla felt it needed to cut prices to increase consumer demand so that it can hit this 2023 target. Overall, that's not good news for Tesla stock investors because now, yes, they might hit this 1.8 million goal, but they're going to hit that goal with lower average selling prices, which is going to lead to lower profit margins. And let me show you what I mean by profit margins here. So here I have pulled up the gross profit margin for Tesla, Ford, GM, Toyota, and Stellantis. And one of the reasons why so many investors have been bullish on Tesla stock is because it has been by far the best vehicle manufacturer in the comparison to these rivals. There's others that are closer, but for the most part, Tesla has been doing an excellent job. And especially if you look at just electric vehicles, electric vehicle companies, Tesla is by far ahead in that industry overall. But not only was Tesla the best overall gross profit margin among these five, but it was also on an upward trend. Its lead was getting larger. That was until it started cutting prices and inflation started to bite into its profit margin, and you can see its lead narrowing considerably down to just a few percentage points here. And it wouldn't surprise me if in the next few quarters Tesla's gross profit margin continues falling because it's kept cutting prices even more. And that's troubling because let me show you valuation now. Investors have been willing to pay a premium valuation. This is the price to earnings ratio. Tesla is selling at a price to earnings of 73. Meanwhile, its competitors, Ford, GM, Toyota, Stellantis, the highest is 11.75. So Tesla stock is almost 7 times, at least 7 times more expensive than its rivals. And yes, I agree, it deserves to sell at a premium price compared to its rivals. But 7 times? I don't know. That seems like a lot, especially when you consider the gross profit margin, the lead in that metric is falling. So that is concerning for Tesla stock investors. That's why I note this news was not great coming out of Tesla cutting prices again. It remains to be seen if they're going to continue cutting prices or if this will be the last one in the year in order for Tesla to hit that 1.8 million target. Now, what would be amazing for Tesla stock investors is if the company comes out and says, you know what, as a result of these price cuts, demand for our cars has increased and we think we're going to hit closer to 2 million cars produced in 2023 instead of 1.8 million. That would be awesome. That would be amazing. So let's see if Tesla makes some kind of announcement in increasing production targets for 2023. Okay, now let's move on to Rivian and the news that came out for Rivian. So this news, I know I said it came out today, but it was actually a couple of days ago for Rivian. And that news was that it announced its intention to offer a $1.5 billion green convertible note that's due 2030. So one of the things that investors had been excited about with Rivian is because it had a strong balance sheet. It had billions and billions of dollars, over $10 billion left in its cash pile to make the progress, cross the bridge to profitability. But now that the company said it's raising another 1.5 billion, it begs the question from investors like, what's going on? How much money are you burning through? And along with this statement, Rivian also posted a preliminary financial results for its third quarter for the 3 months ended September 30th. And it said revenues is likely to come in between 1.29 billion and 1.33 billion, which is phenomenal growth from the just 540 million it achieved the year prior, same quarter. But the trouble came when it released its cash figures. So cash equivalents, and short-term investments fell from 10.2 billion on June 30th of this year to 9.1 billion as of September 30th of this year. So in the last 3 months alone, they went through $1.1 billion in just 3 months. And so if they're going through $1 billion every 3 months, this cash pile is not going to last very long. And you can understand why the company felt it needed to raise more money. And already, if you look back at Rivian's history, retained earnings, which is how much money the company has gone through and lost, so far is at $15.67 billion. That's how much money this company has lost in an attempt to build this company to get it to profitability. So far 15.67 billion, and there's likely much more losses to come before or if ever the company hits profitability. Now, the good news is that it's improving its cash outflow from operations. So you could see cash flow from operations improved from closer to 1.6 billion to 1.36 billion outflow in its most recent quarter. And given that it only went through 1.1 billion, it decreased cash 1.1 billion, it may show that its cash flow from operations made another step forward when it releases final results of its third quarter. So that's something to look out for. Is Rivian building a trend of improving cash flow from operations? Even if it's negative, if it's heading in the right direction, then that's good news for Rivian stock investors. So Rivian's price, of course, after this news came out, the stock price was down over 20% as a result of this. It was a combination of the potential impacts of diluting shareholders and the news that the company went through $1.1 billion that sent the stock price falling by over 20%. So the news overall was not good for Rivian stock investors. There was some encouraging signs from that figure in that the sales was up significantly from the prior year and the cash from operations could have improved again, showing a trend upward. However, investors took it more so as bad news because the company went through $1 billion in 3 months again, and that means that it's not going to last very long with the cash pile that it has. All right, but before I let you go, if you've gained some value from this video, which if you've made it this far, you probably have. And if you want more content just like this, it would really help if you would subscribe to the channel. It'll support videos just like this one. Thank you so much for watching.